All right, traders, welcome to the training series called Cryptocurrency Trading for Beginners. This is Greg Vogel, and we're going to teach you a 9-step process here on how to trade. Now, if you're a brand new trader, whether you're a pro trader, there's always stuff to learn, but especially for new traders, we're going to walk you through a process if you've ever wanted to learn how to trade any type of market. But we're going to specifically be talking about cryptocurrency trading, but these 9 steps apply to all types of trading. Now, here's what we're not talking about. What we're not talking about is buying Bitcoin and holding that position and hoping it goes up. That is called hodl position. Hold on for dear life. That's not what we do. You've seen that all over Facebook, where everybody jump in and buy Bitcoin. And then in late 1997, the price from Bitcoin went from $2,900 against $1 all the way up past 17,000, which I traded that. It did extremely well, but that was a longer term position. We're going to talk to you about how to trade. You're waiting for very small trading opportunities that you can get in and out of the markets within a matter of a couple of days. And this is really, really cool. It's a lot of fun, and it can be extremely profitable if you understand how to do it. So that's why I created this series, so that you guys can walk through in all of these steps. There's going to be 9 steps. 9 steps to becoming a rockstar crypto trader. We're going to be walking you through these 9 steps. And if you understand these 9 steps, and each one is easy to do, this is not extremely difficult, okay? But you got to have these 9 fundamental pieces down to be successful as a trader. So let's go through the 9 steps you're going to be going through in this series. And first of all, we're going to be talking about the trader's mindset. The first thing you need to understand is that trading is a business. It is not gambling. A lot of people think about trading like, oh, always got to be in a trade. It is about a business. We're going to teach you how to have the mindset of a trader, because if your mind is right, okay, you have the chance to be successful. We can teach you the how-to all day long. But if your mindset is not correct, especially number 1 and 2 are probably the most important parts of this series and learning how to trade, okay, is number 1, your mindset. 90% of trading is psychological. And we're going to start talking to you a little bit through that, okay? 2, we're going to talk about managing your money. Before you start taking that first trade, you want to understand a process and how much you're going to be trading. You need to have a game plan of attack, or you start getting aggressive. When you start winning over and over again, it's really easy to start doing really dumb things. And then you start trading too much of your account at once, and then you have some losses, and then you lost everything you gained. So we're going to teach you how to be profitable and how to stay profitable. Number 3, we're going to talk about understanding what's called support and resistance. We're going to be pulling up some charts. I'm going to show you what this is and how this works. We're going to teach you how to understand what the trend is. And then we're going to be talking about trading with the trend versus what's called counter trend trading, okay? And then we're going to talk about how, once you understand steps 1 through 5, how do we find the perfect trade setup, okay? How do we sit back and wait for the right trade like a hunter, waiting. You just don't start clicking buttons and start buying Bitcoin because you think it's going to go up. You wait like a hunter, okay? And we're going to be talking about how to do that. And once you're in there, how do you protect that trade? Because you're not going to win every trade. This is something you need to understand. You're not going to win every trade, and if you're going to have some losses on trades, you have to cover those losses and keep them very, very small. We want to keep our losses very small and let our winners run. So number 8 is let your winners run. Once we're in a winning trade, how do we manage that trade? How do you maximize as much profit as you can out of that trade? And we're going to show you exactly how to do that. And number 9 is, once you understand the first 8 pieces, I'm going to show you how you can completely automate the entire process using software that you can 10x your trading, okay? So let's get into the video series, and we'll go to the first video. All right, traders, we're back to this section. Section number 1, the trader's mindset in the Cryptocurrency for Beginners series, and the 9 steps to becoming a rockstar crypto trader. Now, first of all, let's talk about a trader's mindset. So first of all, let's talk about McDonald's. Okay, so let's say you have a job at McDonald's, and many of you watching this video maybe either have or known somebody, or you've eaten there, or any type of restaurant right there, right? Like a restaurant chain. So they don't just get in there and flip burgers and decide, hey, Bill decides I want to give 2 pieces of cheese and 4 pickles on a sandwich, while Susie gives 6 pickles on a sandwich, while Bill only gives 1 pickle on a sandwich, right? Because why? What happens? because when the customer comes by, they don't know what they're going to get, right? It is not a predictable machine. Reason the McDonald's works and a lot of these other franchises work is because their business is run like a well-oiled machine. Okay, there's a process, a system. Imagine a huge, thick manual, everything from how to clean the floors to how each burgers is cooked, exactly how many seconds on each side. I mean, it's an entire process. And what we're going to be talking about is setting up a trading plan and having the trader's mindset. We'll talk more about the trading plan and equity management. But the trader's mindset that you need to understand is that this is a business. If you're getting into trading because you think you have a gambler's mentality of, oh my gosh, I got $100, I can turn that into $1,000 in a month. Think about that. Where do you take $100 and turn it into $1,000 a month? It sounds like Las Vegas, doesn't it? Or any type of gambling casino. So that's not what we're doing, because what happens at most casinos, if you know the story, you hear a lot of people win and win tons of money, and they know how to do gambling, and they go do all that stuff and do well. However, most of the time the house wins. And trading is going to be the same way. If you have a gambling mindset when you get into trading the markets, you're going to get killed eventually. So the trader's mindset is number one, we're going to put a predictable trade plan in place, which we'll get into in number two under equity and trade management, okay, of having a trade plan. Number two, this is a business. So we have a predictable machine. You have a certain amount of capital that you're working with, and you have a game plan of how you're going to grow and scale that capital. So the biggest thing you need to understand in the mindset is you have to wake up in the morning with the mindset that this is a business that you're going to run. There's going to be systems. You're going to be following a game plan exactly, a systemized game plan that you're going to put together, and you're going to follow that plan every single time. So there's a lot of things we want to talk about. Number one, in trader's mindset. And we're going to get into this a little bit later, but one of those is called revenge trading. So like we're going to be talking about in section number 2 under managing your money. And it's going to be talking about, you want to go into each trade, right, with a specific amount that you're going to risk on a trade. So let's say you have a $10,000 account. You want to risk 2% of your account. So if that trade goes against you and you lose that trade, you're going to close that trade using what's in section 7 called a stop loss. Okay. So what happens if you have $10,000 in an account, you lose a trade, you lost $200. Are you really going to freak out about that? It's $200, right? But if you don't have that trading plan in place because you have a strong mindset as a trader and you break out of that and you say, what if you had 10 wins in a row? What if you had 15 wins in a row? Tell me right now that you wouldn't get a little bit cocky and think that you're unstoppable. This is exactly what happened to me in November of 2006 when I was trading the foreign currency markets, and I took a trade with my own money. I had $132,000, I think, in an account. I went away for a couple of days. I took a trade without using a stop loss, a trade that I thought I could not lose. I was killing it for the last 2.5 months, like almost unstoppable. I took a trade. I took too much of a trade. I risked too much without a stop loss at all. And what happened when I came back 3 days later? Literally, I walked away thinking I was going to let the market run. I got my account margined out, which basically what was left was I had like $12,000 left in my own personal account. So I lost over $120,000 on one trade on the pound dollar because my mindset wasn't strong. I was gambling at that point. And at that point, I've been a trader already for a year and a half, and I already knew that you have to have a trading plan in place. So listen to me very carefully. If you're going to be trading successfully, cryptocurrency, I don't care if it's crypto, if it's Forex, if it's stocks, options, whatever, think about this as a business, okay? So you've got to keep a strong mindset and have a plan of attack that you're going to be using that same exact plan over and over again. So let's go to the next section. We're going to talk about how to manage your money. This is probably the most important part of trading other than having the trader's mindset. All right, the next step in the cryptocurrency trading for beginners program is managing your money. Now, this is probably the number one key to your success as a trader. It's probably the number one issue why most traders who fail. So let's talk about this. So here you are, and especially if you're trading cryptocurrencies, and this, by the way, works for any type of trading. If you're a crypto trader, You've seen a lot of these people post on Facebook, hey, buy Bitcoin, and you watch Bitcoin go up and down, and you put a few bucks in and you made a little bit of money, or maybe doubled your money or tripled your money, and you had some great gains. Or you heard people who took a little bit of money and made a lot of money trading, right? But here's the problem. Most of those people got lucky, period. They have no freaking clue what they're doing as traders, and they just got lucky. That's not going to win long term, okay? So we're going to talk about money management. And this is the number one thing of having a game plan in place before you start trading. And we're going to be getting into some steps here in just a second of what it takes. So let's talk about these steps. Let's scroll down here. Okay. So let's talk about the steps to properly manage your money. And this is what I'm talking about. Let's say you have a $10,000 account. You could have a $1,000 account. A lot of these cryptocurrencies trading platforms, you can actually trade with $100, right? But the plan always works the same. Okay. You must have a plan in place, number one, before you take your trades. Number two, no revenge trading. We'll talk about that in just a little bit. 3, don't risk more than 1 to 2% of your account balance per trade, period. Do you understand? Number 3 is probably the most important part. Okay, 4, always use a stop loss. We'll get more in depth in this series on how to set up stop loss. We'll actually pull up some charts to show you how to do it. We're going to be taking a rifle approach to trading, not a shotgun approach. And 6, have a strong trader's mindset. Let me fix that slide. That is supposed to be a trader's, get in there, mindset. All right. Have a strong trader's mindset. Follow the plan. Don't get emotional. We'll talk about that a little bit. We talked about that a little bit. We're going to get a little bit more in depth in this video. So, because number 1, have any plan in place. Okay. So once you understand more of the series in here, support and resistance, so whether you're using a piece of software like Crypto Pro Elite, whatever you're doing as your trading method, we'll get more than that into that a little bit later. You need to have a plan in place. And number one thing I see that traders end up doing is not having a plan in place. They just feel like they have to be in a trade. Oh my gosh, Ripple's going up. I got to figure out how to get in. That's not how you do it. You got to wait. Now, so if any of you watching this video have been into hunting, I'm not a hunter at all. I've never killed another animal. But there's a lot of people who enjoy hunting, but you at least understand a hunter, right? A hunter doesn't go out there, just say you're hunting deer, and they don't take a shotgun and start shooting all over the place, right? And hoping they're going to get something. Yeah, they might shoot some leaves, they might shoot a squirrel, they might accidentally shoot down a couple of plants, or shoot down your grandma's mailbox or something along that line, okay? But that's not how a real hunter hunts. A hunter sets a tree stand, he waits with his rifle, and sometimes days, sometimes weeks, for the right, perfect setup. The perfect setup, because you only need one good shot. Okay, and so you need to understand how you're going to trade before you start taking trades. If you have set up an account and you bought Bitcoin, you have no freaking idea what you're doing. You didn't have a plan in place. You've got to have a plan in place. Okay, so number 2, no revenge trading. Now here's something that happens often when it comes to trading. And I've seen this before. And here's a good example of a friend of mine. Let me grab a little sip of water here. I'm very thirsty. My throat's getting worn out. I've been shooting videos all day. All right, so no revenge trading. A friend of mine years ago was trading, and he started off with a $5,000 account. And at the end of 2 weeks, he took that $5,000 account to almost, no, actually it was more than 50,000. It was like 53,000. He almost 11x'd his money, trading one specific trade over and over again. So here's what he did. He had a plan in place. He had a specific way that when the market went down, he sold. When the market went up, he bought. And he was in and out, in and out, in and out, in and out, in and out. You know, he was taking 12, 13 trades a day, right? On the same, this was a currency pair. It wasn't crypto, but it's the same type of thing. So his plan was good. Here's the problem. He got very cocky and he screwed up with number 2 and number 3. So number 1, he got a little bit more aggressive and started trading more of his account balance than he should have. We'll talk about that here in a second. But 2, here's the thing. There's always going to come a time as a trader. Listen, you're going to lose trades. You are going to lose trades. Stop what you're doing right now and understand you are going to lose trades. Nothing you're gonna do is gonna prevent you from losing trades. No way around it. However, How you handle it when you lose a trade is going to be a huge indicator of your success. Here's what a lot of traders end up doing. Listen. They take a trade. Oh, shoot, they lost a trade. Take another trade, lost another trade. Take another trade, lost a trade. Now they get frustrated. And they lost maybe 5-6% of their account balance. Maybe they lost $500-600 on their $10,000 account, right? What do? Oh my gosh, I got to figure out how to get that back. So what do? They break number 3. They trade a little bit too much of their account, more than they should. 2, they didn't follow their plan of attack, and they just trying to jump into a trade, and then they end up losing even more. What was that called? They call that revenge trading. So you've got to make sure that if you lose a trade, every transaction is separated. Celebrate your wins. Woohoo! That was a great trade, especially in crypto. I'm going to show you some trades like on Ripple and Bitcoin that we took that were just freaking phenomenal. Massive gains, 20-30% on one trade with very low risk. We celebrate those trades, but I don't turn around and say, my gosh, look, I did 30% on one trade. Now I'm unstoppable. Once that trade's over, I cut that off, I compartmentalize, and I go to the next trade. And I start with a plan, no revenge trading, same amount of risk, always use a stop, follow the same process over and over and over again. If you lose a trade, guess what? If no other trade setups happen for the day, go golfing. Don't try to get your money back by saying, shit, excuse my language. I got to get in here, win a trade back. And you start clicking buttons and trading again, and then you get too aggressive and you lose another trade. Okay, so number 2, no revenge trading. Number 3, you want to focus on your risk, how much you risk per account. So let's say that and this is a simple calculation. Let's say you have $10,000 in a trading account. You want to make sure you are not risking more than 1 to 2% of your account. So if you're going to be a little bit extra aggressive, 2%. What you have to understand is your own risk tolerance, right? Now, some people who get stressed out easy, you might want to start focusing on 1%. If you have a very strong mind and you are very laid back and you can compartmentalize, okay, I lost a trade, no big deal. Let's wait for the next setup. You can potentially do 2% per trade. So let's talk about that. Let's say you have $10,000 in an account and you've been in a trade for 2 days. It's been sitting neutral. You're like not much above where you got in. And then you go to the grocery store and you come back and your trade went against you, got stopped out. We'll talk about that in a little bit. And you lost 2%. So you lost $200. So close your eyes. If you're driving, don't be closing your eyes. But if you got $10,000 discount and you lost $200, how are you going to feel? I'm going to guess you're going to feel, okay, no big deal. It's only $200. So let's say you lost another trade. Another $200. You lost another trade, $200. How are you feeling now? Are you still feeling okay? You lost 3 trades in a row. You lost $600. Are you still feeling okay? Or is that starting to stress you out? So if you can't handle the fact that you just lost $600 3 trades in a row, you're risking too much of your account, right? Because ultimately your mindset is going to shift towards a scarcity mindset, and you're going to go back into section number 2, and you're going to try, no matter what you do, you're going to try to revenge trade, and that's what you're trying to avoid, okay? So you want to make sure you are risking no more than 1% or 2% of your account balance on one trade, because you have to last for the long haul. Every trader at some point in their career is going to have 10 losses in a row. This is something I learned years ago. It took me 3 years before I lost 10 trades in a row. Once I got good at it, once I understood how to trade, right? And at that point, I was a very skilled trader and I understood how to trade. But I still lost 10 trades in a row at one time. Actually, I think it was 11. And because I was only risking 1% of my account balance per trade, I only lost 11%. I wasn't freaked out. The following month, I made 24%, so I gained it back. Following the same process, I didn't go any more than 1%. I stayed at my 1%. I followed the plan of attack. So listen, this is very, very important, guys. Do not risk more than 1 to 2% of your account balance. Number 4, always use a stop loss. And we're going to talk about this a little bit later in this series in a different video or a different section. But a stop loss is basically saying, let's say we bought Bitcoin against US dollar at a certain price. We think it's going to go up to here, and we're expecting this thing to move, right? But we can't always predict everything. Just like you've seen a lot of things in life can be completely unpredictable, and you don't know what's going to happen. So you have to put something in to protect your capital just in case it doesn't go your way. And that's what's called a stop loss. And what that is a second order that if the price of Bitcoin would drop down to a certain place, then you're going to go ahead and just cut your loss and let it go. And you're going to make sure that whatever that distance is between your entry place where you bought and your stop loss where it closed the trade out in a loss is no more than get which one? Yes, no more than 1 to 2% of your account balance. So we're going to show you how to set up stops, a couple of different ways of doing it in just a little bit. Number 5, we talked about the rifle approach. You're not just getting out there shooting. A lot of traders feel like they have to always be in a trade. You don't. Think about it. What if, and we'll talk about this a little bit later, we could show you a really cool approach to how you could take 2 or 3 little trades a month and crush it. Or you want to be like everybody else and try to take 2 or 3 trades a day and they keep losing all their money, right? So we're going to focus on having a rifle approach, not a shotgun approach. So number 6, you want to have a strong trader's mindset. Get in your trades, get out your trades, follow the plan. When you're done trading, go play golf or go live your life, do whatever you want. But you don't have to have your computer open trading all the time, okay? So that's that for section number 2, managing your money. Let's go to section number 3 of the series. All right, section 3 of the cryptocurrency trading for beginners series. We have 9 steps we're talking about on how to become a rock star crypto trader. And this is number 3. We're talking about support and resistance. So from here, now we're going to start digging into, and not just lecture here, we're going to get into some charts. And we're going to show you what this means. So first of all, let me pull up a picture here that I have of support and resistance. This is something I just found on Google, right? So let's talk about a building. In fact, you know what? Let's get to some charts first. So right here on this chart, we are looking at Bitcoin against US dollar. So one thing you need to understand when we're trading cryptocurrencies, there's 2 different ways to do it. Number 1, you can just go to companies like Coinbase or something like that, where you can have a crypto wallet, right? And you can literally just buy cryptocurrency. So you can buy Bitcoin and just hold on to Bitcoin. It sits in a wallet. That's not what we're talking about. We're talking about trading the markets. As the markets move up and down, we are looking for those rifle approach opportunities, right? To take a trade, to get in the market, manage that trade properly once we're in, and then get out with a profit, okay? So that's what we're going to be focusing on. So when we're talking about doing this, we're talking about trading the crypto spot market. So we're talking about, in this example, we're trading Bitcoin against a dollar. So right now, let's open this up a little bit more so you can see this. Right now, as I'm shooting this video, Bitcoin is at $3,759. Now, what that means is it takes 3,796 US dollars to buy 1 Bitcoin. Okay, so a year ago, Bitcoin was at $17,000. So it took 17,000 US dollars to buy 1 Bitcoin. So we're trading these in pairs. Okay, so with that in mind, we're going to talk about, this is a chart. Let me zoom this in. In fact, for you newbies, let's talk about what each one of these candles are. These candles, we have 2 different colors. The way we have this set up on this particular chart, the green candles means for 4 hours. This is a 240-minute chart, meaning each one of these candles represents a 4-hour time period. So in this 4 hours, basically what this means is Bitcoin went from $3,953 all the way up to $4,121 in 4 hours, okay? So these red candles mean the price started here and went down to here. Now the wick means during that 4-hour period, you see this little line here? Let me see. I'm tired of this cursor, it's driving me nuts. This little line here below here, this little wick, that means the price actually went lower, but it closed that 4-hour period right at that spot, okay? So once you understand this, we're going to start talking about understanding support and resistance. So if we backtrack, let me find a good spot here. Let me zoom in, but let me move this chart a little bit. I want to talk about support and resistance and show you how super, super cool this is if you understand the process. So you can see, I'm going to close this down a little bit. There we go. Let me find a good spot so we can really find some good. Okay, here we go. We can see here that at this point, and this would have been starting to start right here. This is like July of 2018 all the way through August 2018. Okay, so this is a 1 month period. you can see that Bitcoin at one point came all the way down to this level. So what is support and resistance? We're talking about a building. Okay, support and resistance is almost like floor. So if you're in it, when you say you walk into this building, what happens when you look down? What do you see all over you? You see the floor. The floor is where your feet. It's holding your feet firm, right? That's called your support. It is so the lower level is always going to be the support, and above you you see a ceiling, right? The ceiling is what's called your resistance. So think about support and resistance as a floor and a ceiling. And we'll get back to this picture in a minute. I'll show you how cool this other thing works. So you can see here that we have a level where Bitcoin drops. So we're going to start drawing some lines. I'm going to show you how some of this works, okay? So we're going to put one here. Oops. Let me delete that. Sorry, I didn't draw it the right way. These lines are a pain. All right, so we're going to draw a horizontal line right there. Okay, now let's see if I can color this. I'm going to take that line, make it thicker, and let's thicken. Yeah, it's nice and thick. And I'm going to color this. Let's see. Let's just make it red so it's easy to see. Okay. Okay. So you see, you can see the line. All we're showing is a line right where the market tend to stop. Okay, and we're going to draw one. Let's see, right here. See how it kept hitting this area in here? So we're going to draw a little line. All you got to do is find areas where the market continues to hit a specific spot. Okay, then, let's see, we're going to, excuse me there. Okay, you can see where the market kept hitting right here. So we're going to draw another one. Oops, let's pull that up. Oops, horizontal line, not horizontal ray. Horizontal line. Right about there. And then we're going to go this way and start scrolling through and finding other spots. Okay. Oh, now the market really shifted. Okay. And we have a spot here. See two of them. I mean, this is kindergarten level right here. See how it kept hitting this line? Oops, let me delete that one again. Shoot. Horizontal line. Thank you. Okay, and then there's one right here. So we'll draw another horizontal line. Okay, there we go. Keep going. And now we are right where we are now. Okay, so I'm going to go backtrack a little bit. And I'm going to show you how this works. So we've got these lines, right? I'm going to show you how the support and resistance tends to work a lot of times over time. So now we're going to go back even further. So now we're talking about, let's go all the way through up till where are we at here? March of 2018. Now I want you to see that, remember we drew some lines starting around July 2018, right? Now if we go back in history, so we're now at March of 2018, you can see that historically the market tends to hit these support and resistance lines and hit and bounce. See how it went up and then kept bouncing back down? Here's the phenomenon when I talk about the floors. Do you notice that how a price broke down here and had a hard time breaking back up, shot down to this line, it went up. Once it broke through, you have the floor, you have the ceiling, support and resistance. Once price broke through, what happened? What used to become the old ceiling has now become the new floor. Just like a building. You walk into a building, you have your floor, right? You have your ceiling. Once you walk up the steps, boom, boom, boom. What used to become this floor, the ceiling is now your new floor. If you walk back down the steps, what now was your old floor now becomes your new ceiling. And that happens the same way with support and resistance. Old support, once you break through it, becomes now new resistance. See how price kept testing and doing it? Eventually it broke back down through, and it worked its way. And guess what? Now it became the new ceiling. That's how it works. So we want to be trading. Well, number one, we'll be talking about with the trend here in just a little bit, but we were looking for trade around major support and resistance levels to take trading opportunities, right? Because it's going to help a lot with the predictability. So let's scroll back to where we are now. So here's an example. We already knew that this was a major support line. Price has been going up, 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 and then it starts shooting down. Guess what? There's a great opportunity that potentially the market's going to at least hit here and bounce. And sure enough, it exploded. Well, all the way from like $6,150 all the way up to before it broke up to through this $7,250. So it went up 1,100 points. Where's that 11,000 points? Anyway, it went skyrocketed, right? So there's a huge potential for a trade setup. So that's what support and resistance is. You can see if you keep going through here, it is not 100% accurate, but it's pretty close when you see old support lines or resistance lines. When the market gets close to those areas, that is a huge opportunity to find potential trade setups. And we'll be talking about those trade setups in just a little bit more. And obviously there's a lot more lines in here that we haven't marked out, but that was just a piece of what I. So let's go on to the next video. All right, traders, this is video number 4, or section number 4, that is. Under cryptocurrency trading for beginners, the 9 steps to becoming a rockstar crypto trader. This is number 4. This is called Know the Trend. All right, so we're back to Bitcoin against the US dollar. So let's talk about what the trend is. And the trend is simply what direction is the market going. So let's start right here where Bitcoin hit this support level and started going up. What direction is the trend? It's going up, right? What happens right here? The trend goes back down. It goes back up. So one thing you need to understand, and listen to this carefully, the trend is your friend. We'll talk a little bit more about counter trend trading and things like that. But you need to understand that most of your winning trade setups are going to come from trading with the trend. So if you understand, like an example, if you were all the way back here in July 12th of 2018, and the market started going up and up and up, by the 16th, you realize that the market is starting to move. So we don't want to be taking selling positions when we know the market is going up. You're going to have a much higher chance of taking a winning trade if you're trading with the trend. And at this point, the trend is going up. So what would we be doing? We'd be looking for buy opportunities. We'll talk about that a little bit more. But in this example, the market went up. It broke. You already saw this existing resistance line become support. I would be taking a trade opportunity right here when the market hit, and look, it went all the way from 72.50 all the way as high as 84.77. You would have crushed it in the marketplace had you taken that trade. Okay, so now what happens when the market starts going back down? Well, now we're looking for selling opportunities to trade in the market. Does that make sense? So it's very easy. Is it going up? Is it going down? Or is it going sideways? Find a sideways market. Right here, you see this whole period of time from, let's say, this is like a 1 month period between September and October of 2018, where the market just went kind of sideways for a little while. Not much happening. And then eventually, same thing. Market was sideways for a long time. We had a huge spike, came back down and settled back into its sideways, what's called a consolidation. Just the market's chilling, not much activity, no trades. And all of a sudden, boom, it explodes, right? All the way down to where it's doing right now. So trade with the trend. When you know the market's going down, down, down like a rock, do not be looking to buy Bitcoin until you start seeing a confirmation. And we'll talk about that in some of the videos on when the market's actually back into buying mode again. Okay. And right now you can see how it's been. It's in sell mode on Bitcoin. That doesn't mean at the time of this video that it is. I'm saying is based on these charts. We're only looking for sell opportunities. Right now, I would be looking to sell Bitcoin if it came all the way up to the 4,400 mark based on this, because it rejected, work its way down. If it hits here and bounces back up, and we can show in the shorter time frames that it's still working its way down, then we would look to sell to for it to drop down even further. So I hope that helps. Let's go to the next video.